Auto as a sector, we are not expecting great numbers because two of the biggest companies, Tata Motors and Maruti, are not going to report great numbers. Tata Motors is more likely to report a significant loss in this quarter, and Maruti, we are expecting their profitability to decline by around 25% in this quarter on a year-on-year basis. Reason being, both the companies are seeing significant pressure on margins. So that's the case for these two bigger companies. Ashok Leyland, we are expecting decent numbers because the CV volumes have been very strong. Overall growth numbers are around 22% for Ashok Leyland in terms of volume. So that's a very strong set of numbers. So that will lead to operating leverage benefits. They have passed on some bit of cost through pricing actions. In the two-wheeler space, Bajaj Autos should report decent numbers. Hero will see some bit of pressure on margins. Escorts, we are expecting them to report good numbers. M&M, we are expecting some bit of pressure on the margins. Also, tractor volumes were not that great. So overall, it's going to be a mixed bag, but the bias is slightly towards the negative side at this point in time.
Fair point. Well, come tomorrow and we'll be all eyes for TCS's numbers. Now, in a seasonally strong quarter this time, the big question is, will tech companies show better sequential acceleration in growth than what they posted in the first quarter, coupled with positive surprise in margins? So, Az, what is your sense? Improving demand, bigger deal closures, rupee depreciation, they've led to EPS upgrades so far, but is there scope for further re-rating, or is investor optimism, would you say, mostly priced in?
From what we've seen, most of the upgrades have come in primarily on account of currency. We've seen very little upgrades for the IT companies, save maybe some mid-cap companies in the past, and maybe at best maybe a large cap, but we really haven't seen significant earnings upgrade, basically constant currency or a dollar revenue upgrade. We've seen rupee EPS and revenue upgrades mainly because of the depreciation in currency. In fact, just recently we recommended investors to start looking to go underweight IT because we're still not seeing upgrades on across the board on a sector-wide upgrades to the constant currency or the dollar revenue numbers.